Welcome to the panel on Managing General Agents, or MGAs. Now, MGA, Managing General Agent, this is insurance jargon. So I'll tell you a little story about what an MGA is for those of you that are not living every day in the insurance world. So you know that obviously every insurance company wants to mix and obtain as many different types of risk as possible. So imagine now that an insurance company wants access to a particular type of risk in a particular territory. Maybe it's fine art in Sweden or something like that, very specific. So the challenge that an insurance company will have is, well, how do I have the expertise to write that particular little niche there? So sometimes in that situation, an insurance company will turn to a managing general agent, an MGA. What they do is they appoint the MGA as somebody who does have expertise in that particular territory or that particular niche. And the managing general agent will do the underwriting work, the risk assessment work, the claims assessment, the distribution, as an agent on behalf of the insurance company. So the managing general agent is not the insurance company. It's a kind of management company that the insurance company outsources this very technical, specific work to. And so the premium is paid not to the managing general agent, but goes to the insurance company. The claims are paid by the insurance company. The managing general agent is paid a fee by the insurance company for their expertise. Now, the reason that we wanted to have a panel about managing general agents is because in the surety and the credit insurance markets at the moment, there are rather more managing general agents than we have ever seen before. The managing general agents as a concept have been around forever. But in our space of credit and surety, we see more of them at the moment. And they're a very important part of the ecosystem of an insurance market. If you want to see where the trends are happening, where stuff is happening, where innovation is happening, where the market is being renewed and remade, the managing general agent section of the market is the part of the ecosystem where you might want to have a look. So as we go through, you do have the ability to send questions in, which comes up on the tablet I have here. So I would encourage you to, if you have a question on anything that's been commented on here, please send in your questions and it'll come up on the tablet and we'll see if we can address those. So we have four of us on this panel. We're all people who are wrapped up for some years in the world of managing general agents. So a lot of expertise here, and I'm going to ask everybody to introduce themselves. So let's go to London, first of all, where we have Kade Spears from Pernix. Would you want to introduce yourself,
Hi,
Kade,
everybody.
and welcome, by the way.
My name is Kade. Yeah, welcome. Thank you for having me. My name is Kade Spears. I'm the co-founder and CEO of Pernix Specialty. Pernix Specialty is focused on enabling responsible and tangible investment and finance through both credit insurance and political risk insurance. And thank you for having me.
Well, thank you for joining us. So thank you, and let's go to Simon.
Yeah, my name's Simon Barker. I'm based in London. I'm the managing director of Nexus Europe, which oversees and helps manage Nexus's European underwriting operations. I come from a surety background specifically. A word about Nexus. Nexus is quite a large multi-line MGA, writing over $500 million of premium a year on behalf of 20 or 30 so carriers. In products as wide as financial lines, credit and surety, aviation and space, accident and affinity, and we write through a number of jurisdictions around the world. We've got 8 or 9 offices around the world. So that's a word about Nexus.
So in terms of these agreements that I just spoke about, which we called binding authority agreements, how many such agreements would Nexus have?
Nexus
altogether?
The number varies, but usually somewhere between 20 and 30.
Right.
And in some cases, you may have agreements with different insurers in different areas of business, or you might have a single agreement with a single insurer for an area of business. And most of the insurers are. Some of the insurers are well-known household names, and others will be often insurers who are who don't have a high street presence, don't have a recognizable presence. They're known in the industry, but they come to an MGA because it allows them that opportunity to distribute further and deeper. They just don't have the manpower, the sales manpower and underwriting manpower to grow their business. So growing their business with an MGA is a fast route to development for them.
Good. Okay, thank you. Welcome.
Thank you.
So our third panelist, Phil Bonner.
Morning, Mike. Thanks very much for inviting me to speak today. My name is Phil Bonner. I am head of global credit reinsurance at TigerRisk Partners. When you talk about breadth of experience, I've been doing credit for 37 years, pretty much 50-50 between reinsurance and insurance underwriting and broking. And obviously experience with MGAs.
And you're the ones that finds all the capacity for these MGAs, aren't you?
Yeah, absolutely. That's one of the challenges we have. Absolutely.
Good. We'll come back to that in a moment.
Yeah.
Let's start off with Kade, because Kade has just set up a brand new business, which I understand you're a shareholder. And so you had your business plan, Kade. You wanted to set up your own business, and you've chosen an MGA platform. You could have chosen an insurance company platform. Why have you chosen a managing general agent as the platform for your new business?
Well, Mike, I think it's a great question, and for me personally, there were a number of reasons. I think firstly, under an MGA, you're focused on underwriting, and so that gives me more time to spend with my brokers and with my clients. And in the current setup in Pernix, I'm spending 90% of my time underwriting compared to my previous employer, which was a large traditional reinsurance company, where I was spending about 10% of my time underwriting. And so that allows for me and my team to, one, provide best-in-class service, but I think more importantly, it allows us to have a better understanding of those underlying risks that we're taking on. And so I think that, for me personally, is the greatest benefit of being within an MGA structure, but there are some other benefits as well. So maybe the second thing is around technology and IT. So in traditional insurance, reinsurance companies, you tend to have non-class specific legacy IT systems. Whereas within Pernix, we've been able to build a bespoke IT system. We've been able to build something that is class specific. And what that allows us to do is, one, to provide for better data capture, but also greater efficiencies in our underwriting. We're not having to log on to multiple portals. We're not having to adapt say a property reinsurance type system to credit and political risk. So I think that is a great benefit as well. I think maybe the final thing I will say, Mike, before handing back is, I think the other benefit about working in an MGA is the people. And so I think MGAs are potentially able to attract the greatest talent. And also they tend to attract a group of people who are really focused and have a strong work ethic. And I think in the current environment post-COVID, that is something that is missing in a number of companies. And, I'm here 5 days a week with my team in the office, and we're really excited to be supporting our clients and brokers. So I think at a high level, those are some of the key things.
Yeah, that's interesting. So like the MGAs in the market are like a magnet that attract the more entrepreneurial people in the market, aren't they? So that,
I think so. I'm biased.
Good. And just a question, you said there you have more time for underwriting than you did before. Exactly why is that?
It's a good question, Mike. It's something that I've thought about quite a bit, and I'm not sure I have a good answer, but I think the reality is an MGA is designed to underwrite. We are an agent acting on behalf of an insurance reinsurance company. And I think by the nature of what we're doing, we need to be experts in the line of business. We need to potentially have unique distribution capabilities, but we're really there to underwrite. That is our job. You know, we're not. I'm not getting caught up in a meeting about the branding of a wider kind of insurance reinsurance company. I'm not being pulled into meetings about high-level strategy. It's very focused on, in this case, the credit and political risk market. We're purely focused on the underwriting. So I don't really have a good answer for that, but I think it's something that traditional insurance reinsurance companies need to rethink, and they need to debate why their underwriters are getting pulled into management meetings and being taken away from the underwriting.
Yeah, it's one of the benefits of being a very focused company without all the baggage and the interfaces with the other lines, I suppose.
Definitely.
And do you want to quickly tell us in your business plan, what type of policies you're writing?
Good question. So we're focused on single risk credit and political risk. So we're not focused on the whole turnover trade credit market or the excess of loss trade credit market. Historically, we do work with corporates, but predominantly we work with commercial banks, multilateral institutions, export credit agencies.
Okay, excellent. Thank you. Thank you. So let's go to Phil, because you've been at TigerRisk for what, 3-4 months?
At least that long, yeah.
4 months, yeah.
4 months, yeah.
Yeah, and so you've got some clients already in the MGA space.
Yep.
So how do you feel? I mean, you get somebody like Kade, who's got his business plan. He's very good underwriter, but I'm going to set up an MGA now, and they come to you because you're the one that's going to give them the hundreds of millions of underwriting capacity they need. So how do you feel when somebody comes to you, or what's your process and thought about that?
Well, obviously, as you just said, 4 months at Tiger, I'm very grateful for anyone coming and knocking on my door full stop at the moment. So that's always good. But no, I mean, more seriously, I think you've got to be very clear what MGA you're supporting, what the purpose of that MGA is, what their sort of USP is, what they're trying to achieve. I think 90% of MGAs that are sort of developed or come out into the market don't actually see the light of day for one reason or another.
So you say that 90% of people who would come to you with a business plan, or somebody like with a business plan, they're never going to actually set up and start writing business?
For a whole variety of reasons. I mean, the very first reason you mentioned there is they come to me with a business plan. A lot of them don't come with a business plan.
Okay.
And it's something that I think people find attractive. I think they think it's a good way, flexibility, more focus on underwriting, many of the points that Kade said. But it's also a business. They've got to work out how they're going to operate. And, some of the best underwriters out there don't understand some of the business aspects of running an MGA, right. which is simple things like attracting people, HR, IT, Kade mentioned technology. I, for one, and you won't be surprised, don't know much about technology in terms of functionality, how it, all I know is turn it on, use it. I think an MGA, you have to be involved in every decision along the way. And of course, one of the challenges is getting the risk taker on board and understanding that as well. MGAs ultimately don't take the risk. It's the paper that they're underwriting on, and they have to demonstrate clearly that they know what they're doing, that they're working to the business plan, and that they're achieving what they set out to do. And obviously that's a challenge. MGAs, again, for me, are one of the more exciting sort of developments, because I think in the right way, in the right approach, they really do focus on the underwriting. They do focus on risk-taking, entrepreneurial mindset. They do look at attracting sort of like-minded people. And as I think some of your earlier panel sessions sort of demonstrated, there are difficult risks out there. It's a difficult market, and you need focused, smart individuals.
So you said that 90% of these people who've got this idea, they never actually make it to go live. So what percentage then of the 10% that get through, they've been filtered by the market and they're tested and they get underwriting capacity, what percentage are failing in the first few years?
Well, I actually don't know a number of that. I mean, I think in terms of setting up and getting the paper, that really depends on that binding authority. I think from your experience that achieving startup is achievable. You have to constantly work at it, and ultimately, it really depends on that partnership between, for me, obviously reinsurance as well, but really it depends on the MGA and the risk taker, and that really depends on whether you're achieving your business plan and your results. And back to Kade's point, underwriting, the focus on profit. If you're making money, people are okay with it. If you're not, they tend to, work in different ways.
Yeah. So I think if I think about all the MGAs I know of, so I've certainly seen some MGAs fail that are not in credit and surety.
Yep.
I can't recall any MGA in credit and surety that's failed in the last 20 years. I can't think of any. So it's quite a rare event. So the filtering is working quite well, isn't it, I think?
Yeah, I mean, I think some MGAs, if you go around the globe, some markets are more suited to or have more prevalence of MGAs. London market, some of the international markets, the US market. There are failures, but in our space, there's been relatively few because they are niche and they are focused generally on underwriting. There are some failures around the world on our businesses, but generally, they've been very successful.
Good. Thank you. So,
Sure.
Simon, so you're a bit of an MGA expert, really, and so is Nexus as well, with the sheer range of different lines of business and binders and so on. So, why did you choose to go the MGA route in the first place? What do you think?
I think actually that I actually come from the broking side. I'm a Lloyd's broker by background. I think MGAs have evolved into space by becoming highly specialized in niches of business, which are not accessible to the insurers to whom we approach. So that might be a mix of product, territory, language, or an application that we see is not being, or an application of a solution which is not being adopted by the local market. So we would want to go to an insurer and say, there is not enough capacity in this market to support this market in the next 5 years. But actually you, Mr. Insurer, you can't afford to set up a branch or a subsidiary in that country. It'll cost you too much money. But we can actually do that process for you. So we deliver a sort of turnkey solution for insurers. And, if you just look back to the sort of the Lloyd's model, I mean, Lloyd's with its 30-odd billion of premium, 40% of that is through delegated underwriting agreements, binding authorities. Now, not all of them may belong to organizations that call themselves MGAs, but, the delegated model is crucial. And I think, what MGAs have done, and when I started my career, it wasn't a word used in the London insurance market. We were just brokers with binders. But actually, it's professionalized itself, and to the point where a group like Nexus would almost consider itself as a virtual insurer. You get the whole service done. It's, all the compliance, all the money laundering, all the financial controls checks. We ally ourselves completely with insurance companies so that actually, they can have the whole suite of service done for them, and that's what we aim to do.
Okay, so you said there that an insurance company might be wanting to enter a new market, and it's too expensive for them. So how can an MGA do something and it costs less money than the insurance company to do the same thing? How is that possible?
Well, first of all, we don't have to, and I pick up Kade's conversation earlier, we don't have to spend 80% of our time in management meetings talking to actuaries, talking to those who supply the capital and the governance of the business. So ultimately, we're a much more lighter structure, and we're able to do that. But I think also MGAs are able to relatively quickly construct ways of writing smaller volumes of business. An insurance company, to use the sort of expression of the supermodels, wouldn't get out of less than more than tens of millions. An MGA can actually make quite attractive profits without necessarily negotiating very high limits of coverage in niche markets. And some markets are just too small for people to go into, too small for insurance companies to set up branches and subsidiaries. So the only way they can get out of their own borders is actually through an MGA. So we offer that sort of market liquidity And the very process of delegation is a really big step for an insurance company to do. You know, regulators really look very closely at delegation, and boards of companies look closely at delegation. So it's a big step for an insurance company, but also it's one way they can expand their business.
So what role, I mean, you're talking about being able to deal with like SMEs, like small premiums. So what role do you think technology plays in making an MGA successful in this case?
Well, ultimately, you can build your own technology. As you know, you don't have to embrace technology supplied by your risk taker. You can build your own technology, which supports your business. You can have a blend of soft information and hard information, and you can, you can invest in digital distribution, for instance. I mean, one of the challenges for lots of insurers is insurance premiums are just too small to be economical for them to handle directly. So through an MGA, you may be able to distribute smaller packages of risk, smaller premiums, and actually, it's very often said that actually a very large spread of smaller premiums often generates a much smoother loss record. Right. It's much easier for insurance actuaries. And in many senses, actually, it's much easier for insurance companies to feel confident about delegating the authority to you. They're not going to have a $100 million loss tomorrow because they haven't delegated you $100 million of capacity. They've delegated you substantially less. So, from my perspective, SMEs, the meat of the SME dinner is definitely of the MGA is the SME market, and it doesn't conflict with the insurers at that point, who may have their own, maybe writing those products, but much larger risks.
Yeah. Okay, thank you.
Yeah.
So coming back to you, Kade, so we've just been talking about SMEs. I think you're not at the SME end, you're at the larger end, aren't you? How do you deal with alignment of interest? I mean, do you think there's an argument that the management of MGAs have a weaker alignment of interest than the employees of the insurer themselves?
No, I don't think so, Mike. I think, you said it before. I think, MGAs, you only exist if, one, you have a track record of profitability. So myself and my team have well over a decade of very strong underwriting performance, which has enabled us to get started. But what I would also say is the only way we continue as an organization is if we continue to deliver that underwriting performance. So I completely disagree with this notion that there's not an alignment of interest. And, I can't disclose our financial forecast, but if you were to look at it, it's completely driven by profitability. So profits are key. And if anything, I think actually it's the other way around. I think that MGAs have a stronger alignment of interest, and if you really dig into it, it's much stronger in my mind, much more driven on underwriting profits.
So why is that? I mean, I'm sure you haven't got a claim yet on your new business, but you will have one. Why do you think that's going to hurt you personally more and make you care more than you did before? Because I'm sure you did care a lot before, but what's different now?
Well, I think before, the reality is most insurance, reinsurance companies today, they structure their compensation around a mixture of a cash component and then also what they call a long-term incentive program. And most of or at least certainly the last two long-term incentive programs that I've personally been involved in, they're geared to the share price of the company. They're not actually geared to the individual performance of the individual or the team. So whereas here, any discretionary compensation within an MGA is purely geared around the profitability. So, I mean, fundamentally, it's different, and I don't understand why that's changed, Mike, over the years. I don't get it, I don't understand it, but what I believe is the MGA actually has a much stronger alignment of interest.
Yeah, so I think the bottom line is that when you have a claim, you're going to feel it in your own pocket pretty quickly. If it's a big claim, if it's outside the
100%
agreed loss ratio, yeah. whereas it's a slightly less direct connection in an insurance company. I want to come back to Phil. You were talking about these people who come with the idea and they haven't even got a business plan. Maybe you can comment on. So if you're in a situation like Kade, you need to be your business, you need to be a company director as well.
Yep.
Right? So could you give us some thoughts about what extra things do you need apart from underwriting if you're actually as a director like managing an insurance company?
Well, I think that's one of the attractions of people setting up MGAs as well. I think Kade focuses there quite rightly on underwriting and profitability, which I think are key. But you're also in charge of a business. So one of the comments I'd add to the difference between why you should care on a claim is because it is your business at the end of the day, and you're the ones making the decisions. Quite often in corporates, other things come into play. It may be hurricane season might be affecting, your capacity and how you react to claims or otherwise. Yep. So I think it's your business. So I think it's the whole spectrum of management skills that you require as an MGA, not just the underwriting. You mention compliance, regulatory work, HR, IT. It's accounting, it's
but
claims.
If you're a good underwriter and you want to set up an MGA, how are you going to get that experience? Because you won't have had it yourself. You might be a fantastic underwriter. Well, how are you going to get the corporate governance and the compliance experience into your company? Well,
there's various people that can help you with that, and some brokers that can help you with that, as Simon's mentioned, and obviously there's various facilities. Indeed, Kade at Pernix has the support of Fidelis and their specific MGA platform called Pinewalk. And so that there is that support network there. But again, Kade mentioned his track record and his experience. You do pick up some of that, and that's part of the MGA sort of challenge, and that's part of the business plan. I think we at Tiger, when we get approached by MGAs, we ask them a variety of questions before we onboard them, before we accept them as clients. And part of that is, can they write a business plan? Now, we can help them with that business plan, absolutely, but we don't want to write it for them. It's their business plan. And so that comes through. And I think intelligent, smart individuals with experience are able to move in those extracurricular skills that are required.
Right. Okay, thank you. So we haven't spoken about the customer yet. You've spoken about our sales. Simon, how does the customer benefit if within the ecosystem of a particular line of business there are MGAs in that ecosystem?
I think MGAs add another distribution point to the market. We call ourselves virtual insurers. We may give ourselves all sorts of monikers, but we are a distribution point. And possibly also we're a distribution point aiming at, or some MGAs aiming at segments of the intermediary market or even the direct customer market that can't easily access the insurers directly. So there is an opportunity to widen the base out because, as been mentioned at other panel sessions here today, insurance companies are swamped with business at certain levels, and they've got cost management issues of just handling that business. So we're widening out the amount of business that can be looked at on behalf of that insurer. So it's a bit like an insurer sort of, has given birth to a little sort of baby insurer alongside, and that allows them to write more business. But we will also go and look for distribution points that aren't readily available to that insurer, and that's one of our USPs. And I think that certainly benefits the customer. And the very fact that because we live and die our underwriting performance, like all MGAs, we have real skin in the game. When there's a claim, we really own that claim. We follow it through. And it affects the profit share that the insurers give us, which is the incentive for us to make profit. So we really want to follow those clients through very, very closely.
So, for example, construction, I know you're active in France. So construction companies in France, your MGA is perhaps the only way they can easily access the insurance capital of the Lloyd's market.
Yes, and the insurers we use. I mean, at least I think it allows them a friendly face to go to, because quite often the providers of those products may be very large insurance companies who are only prepared to work with large established insurance brokers in the market.
Yes,
so
yes.
other up-and-coming brokers or distribution points can't get in and can't get to speak to the insurers. So we allow them that opportunity.
Okay,
Yeah.
good. So Kade, customers for the structured credit market in London, why are those customers going to benefit because Pernix has entered the market? What are you going to bring?
Well, I think first of all, it's strong service levels. So again, because we're spending more time underwriting, we can respond quicker than our peers. We think that's absolutely critical point. But also we can devote time to those clients. So the types of risks that we're dealing with are typically complex. Clients will typically arrange a conference call. They'll arrange a meeting to go through things in detail. One, we can be better prepared for those meetings. Two, we can actually attend those meetings. And really, I think the benefit of having, I keep going back to this point about having time to underwrite, that means you're spending more time with your clients. And I think that is just absolutely critical factor for underwriting profitability, underwriting performance. But it's really, I think, the market has been missing that. And I think this is one of the great benefits of MGAs, just spending time underwriting with clients, gaining a better understanding of that underlying risk.
Do you think, Kade, that your competitors in the more conventional insurance companies, do you think that their behavior will change in any way because you were there?
That's a great question. I mean, I think that, certainly if our response time is 24 hours, 48 hours compared to our peers taking a week or longer, that does put pressure onto them. I think it sets a higher standard. But I don't know. I think we'll have to see over time.
I'm sure you will have an impact. I'm sure they will be watching you.
We're trying. We're doing our best.
I'm sure they'll be watching you. But that's certainly been my experience. So as an MGA, in some ways you have more power to sharpen and tighten the offerings of the bigger insurance companies than you would if you were inside the big insurance company. Because the whole market does watch what MGAs are doing.
Totally agree.
And some insurance companies go and try and buy MGAs to try and buy that expertise after a certain point.
Yes.
So if they can't do it themselves, they'll buy it out. So,
Yes. And I guess another thing which relates to that is that if some new product idea or some behavior is being built, it can be done more cheaply in an MGA than it would be done in any other way because of the sweat equity of the entrepreneurs. And then the big insurer can buy it and still will get a more effective cost for that development than they would have done themselves.
Well, there is herd mentality in the market generally anyway, and I think you're absolutely spot on. If you've got time to underwrite, as Kade was looking at, and you're looking at either an individual deal or a specialty deal, others will take a lot. It's a syndicated market. Others may follow even a little MGA if they've got experienced underwriters. The rest of the market follows, sometimes a bigger capacity, and that grows and still develops the market, particularly on some of the niche products like credit, political risk, structured credit.
Yeah. Can we talk a little bit about technology? Because I know you're very focused. You need your clients to have good technology for reporting. But can you give us some insights as to what happens with technology, first of all, in a very big company, let's say, that wants to enter this market compared to an MGA?
I can. I think one of the challenges that we have as an industry, both insurance, reinsurance, broking, is data and how we use it. And I think in big companies, they're big legacy systems that are not really bespoke for our products. And, it's difficult to get data out, get history out, get really live information. Earlier talks today at the conference have focused on the marketplace and underwriting spreadsheets, etc. That information needs to be out there generally, and it also needs to be there for the reinsurers. Reinsurers are absolutely happy to take risk. They just want to know what risk they're taking, and the data and technology on a monthly basis rather than quarterly bordereau that's point in time is really pretty old-fashioned these days. And I think it's something that we are struggling with as an industry. And I think some of the MGAs, and obviously particularly as Kade is here, Kade's new venture, they're very focused on that, and that should be game-changing.
Yeah, so there's an efficiency there in the MGA structure, isn't there? Because if you have a legacy system and you can build a new system, but then you've got the migration costs, which are inevitably painful. Absolutely. If you're starting afresh, as Kade is, you don't have the technology baggage or the legacy or the migration to deal with. So Kade is laughing. He doesn't have any migration to worry about. That's why he has more time to spend on
I am laughing, Mike. No, but Mike, I think it's interesting. When we started up, we had as a team an idea of what we wanted as our system, all the data points we wanted to capture. And, with support from Pine Walk Capital, we've gone out and we've built that. And it's exactly what we want as an underwriting team, what we know we need to see, what we know we need to capture. But in previous places, we've come from different companies, have just been unable to achieve. And we've gone out and done that within a few months and built it. So I think we're a great case study in, the IT side. It is possible, and larger organizations could do it as well. But for reasons I don't understand, either the IT teams are siloed, or the underwriters can't get the support from management or the IT teams. But you can build the best-in-class systems. And today you can actually build them very quickly in a cost-effective manner, which has been the most surprising thing to me, coming from large traditional insurance, kind of reinsurance companies, how quickly you can do it, how cost-effective it actually can be. Yeah. But you have to have the will, the desire, and frankly, you've got to have the work ethic to sit down and say, this is what we want to build, and actually scope it out and build it. It's very hard to do that.
Yeah. So you've also been a good supporter of MGAs in your previous life.
Definitely.
I've watched some of that. So technology has been there. So you've had experience of supporting an MGA where the whole platform is technology driven. I understand.
Well, before I helped set up Pernix, I have supported a number of MGAs who were starting out. And for me, MGAs, there were kind of three things. MGAs had to bring one, expertise; two, potentially they had to bring a unique source of distribution; or three, they had to apply technology to the underwriting matter at hand. And I've seen all three firsthand and supported new MGAs doing all three or a combination thereof. And I think technology can be used as a way to offer new distribution methods. It could be a way to have better insights on the risk, i.e. improve the expertise. It can also just be something which in the back office allows for you to be more efficient in your operations. But so technology can be deployed by MGAs and by insurance and reinsurance companies in different manners. And I've seen a number of different approaches.
Yeah, thank you. So we're into the question time here. So the question coming in here. So MGAs are sometimes seen as disruptors, especially by established insurance companies in the market. I mean, do you think that from the point of view of the existing insurers in the market, are they disruptive? And is that a bad thing? Simon?
I think there's probably disruption at the sort of infotech end of large mass distribution products, which change the dynamic of business. I think at the specialty end, we're part of, and you used the word earlier, the ecosystem. We're part of the ecosystem that allows those insurers, because let's face it, I mean, particularly in areas like sort of credit and surety, these aren't actually very big product areas for large insurance companies. So they've got to stay relevant. And the underwriters who run those divisions, who will delegate to MGAs, have got to make sure that they're keeping their premium volume relatively stable, and also their loss records stable. So I don't really see it at the specialty end, but I definitely think that, at the micro end, there's been lots of change in the motor industry, household, personal lines products. That's where a lot of disruption is good. And that's where a lot of quite significant private equity money is going into infotech and so on. So it's a very broad spectrum and requires a broad answer.
Okay, thank you. So Phil, disruption. So sometimes the big existing players in the market may not welcome MGA startup. I was at a conference in June where some of the large insurers were on the panels, and somebody asked them about, what do you think of, to name some of the new startups that are MGAs, and they didn't smile. I mean, what do you say? Do you think is it disruptive? Is it a threat to the existing players?
I think there's two questions. There's disrupting and threat. I think, to Simon's point, I think there's a degree of disrupting in terms of bringing some of that technology, agility, innovation to the market, underwriting maybe different products and in a sensible way. But most MGAs obviously are small by nature when they start, and the bigger guys, I would say, shouldn't see them as a threat. I think they should see them as expanding and growing the market for them. One of the challenges that you asked me right at the start, I'm the man that brings capacity, reinsurance capacity to these things. There's plenty of opportunity out there for everyone at the moment, across all sorts of credit product lines. Right. And I think as an industry, again, we've really only touched the sort of surface of where we can operate and what we can do. I think we need more capacity in there, not less. And I don't see it as a threat to anyone. I see it as a real opportunity to, grow and, establish our marketplace for the next 30 years in terms of how we adopt, practices.
So I can think of at least 3 trade credit or credit space MGAs that have launched this year. What about the argument that the market needs to be getting prices up now because of the increasing risk, and they're going to drag the price back to the bottom?
Well, I think that, you set your own price at the end of the day. I think there's always going to be someone that competes, whether it's an MGA or whether it's another insurance company. The market tends to set its prices. Your loss ratio tends to set your prices. And I think, the outlook and the risk environment sets your prices. If you're going to sit there and say, I've got to go to the bottom price, then you're probably pursuing the wrong, strategy, I would say.
You won't last long, will you?
No, exactly.
So, Kade, how has the market been in response to you? Have they welcomed you, your more established competitors?
Well, I mean, to be honest, I'm personally, and the team are not too focused on those competitors. We're focused on our clients and on our brokers. And I think in the short time we have been live, we have disrupted the market, not because we're offering cheaper pricing. We're definitely not. It's because of the work ethic and the response time. And I think we're setting a higher standard. And we're doing that by putting in longer hours than our competitors. We're doing that by working over the weekends if we have to. And, this past weekend, there were phone calls and text messages emails between the team, because we were focused on getting responses out over the weekend. So I think that's the difference. There's nothing new, unique, special about that, Mike. But I think as a team, we're going to outwork our competitors, and that sets a much higher standard. And that clients respond to that. So we've had a very, very positive response from clients who, frankly, are tired of waiting 2 weeks to get an NDA back from a underwriter. Okay. They're tired of waiting 3 weeks for a few comments on a wording.
I have to stop you there, actually, because we're out of time. Okay. But, thank you anyway. So thank you, the three of you, for coming here and joining the panel. I'd say to Kade, I very respect what you're doing, and I wish you all the best of luck in your
Thank you very much.
venture, and I'm sure that you'll be very successful. Phil, likewise, good luck with your
Thank you.
slightly less new, but also new venture, and of course to Simon and Nexus. Long may it continue. So thank you very much.